Hey Stockhouse, today is August 19th, time for another edition of Markets in Motion. Wanted to focus on a few different random things this week. First off is financial conditions. This is the Bloomberg Financial Conditions Index, and it looks at a number of different things for financial conditions. And as you can see, wow, hitting a high that we haven't seen in years, decades. Going back, this takes us all the way back to 1997, and you can see it's never been at this level before. You can see what happens to these financial conditions when things deteriorate. This is '08, so this is what everything happened in '08. This is 2020 for COVID. But you can see right now hitting new highs, so that's definitely positive for markets out there. Next thing is earnings. Where are earnings headed, and what does the market typically do? Well, you can see that the earnings, the blended earnings, forward earnings line is right here, and the market, for the most part, trends around those. Clearly, we have some different events. So this was around clearly around the war. This is around the tariffs last year, but generally it tracks those numbers, and you can see it hasn't really kept up. Same thing with this. You can see earnings expectations, and here are the earnings expectations, and here's the market. So it hasn't, again, really caught up to what we're seeing. So lots of talk about how markets are extended from a valuation perspective, but we continue to see the earnings increase. And as long as the earnings increase and the expectation is that those earnings increase, the market should continue to move along as well. Then the next thing was copper, and we've seen this move in copper where the copper price now is worth more, or is valued higher than where it is in the future, which is what they refer to as backwardation, typically because of uncertainty and storage and all of that. Prices are higher down the road. And that's just a function of how much copper is being used and how little the stockpiles are. And then just jumping around here, looking at gold and seeing central bank purchases, you can see the central banks continue to buy gold, and we see a fair bit of flow into ETFs around the world as well. When we pair that with gold seasonality, you can see that we've gone through this period of weakness, and now we're in this period where gold tends to rise. What does that mean for what we're seeing with the mining shares, both copper and gold? Well, you can see here, this is the Toronto TSX mining sector. This is the TSX gold sector. GDX are gold shares, and these are copper shares, and you can see all of these RRGs are headed in the same direction. So they're heading into the improving or in the improving, and they're all heading towards leading. So it should shape up for some interesting times in the fall when we think about seasonality, we think about where things are from a supply-demand perspective, and at the same time, these are starting to head up. And then the second thing I want to just look at, and the last thing, is just looking at the financials. And you can see here, this is the TSX financials. We're heading into reporting season this week for the TSX. It'll be interesting to see how they respond. We're starting to see just a little bit of weakness. I mean, they're still very strong compared to the overall market. And then this is the US financial sector. Again, still very strong. We're just starting to see the very early indications that perhaps they could be losing some momentum. None there yet, but that's something to watch for sure. That's it for this week, everyone. Have a great week out there, and take care.